All right. West Texas oil. I don't know if that's equivalent to light sweet crude oil. It's on my Owanda ticker, WTIC in the O in the US dollars. And that's all it is, guys. Okay, monthly candle chart. We had a nice bottom right here. Check it out. With a few targets. Okay, here we go. Even here, man, look at that top. Always look at the monthly first. And right away, you'll know what you're dealing with. If you start looking at the daily, then you get enthused with whatever direction it's giving you. And then you forget to look at the weekly or the monthly. The pressure of the higher time frame, it could bear on those smaller fluctuations, the noise within those smaller time frames, and what you think is a strong stage 2 breakout on the weekly or on the daily, but then you look on the monthly and you were actually in a downtrend. You'll have that pressure against you, muting that move in the direction you want. Instead of giving great results, you'll get a so-so result, even maybe getting whipsawed, increasing those chances of getting triggered out. So let's look at the monthly, man, using my monthly chart trading framework. Whole bunch of targets reached. That target here, closer pattern to the breakdown line. It's actually right here. Implied measure moved, reached. Patterns within patterns, making bigger patterns. See, after that formation, give a target. After that, started testing that previous support here at 78. Did that make it? Ooh. Implied measure move, added to breakdown line. Target reached. Remember, further away the target, you get chances. So this is pretty cool. It dropped so fast that you reach that target 2-3 months later. You didn't have to live a pullback, because remember, this is a monthly candle chart. You're starting to get far away from that 12-month moving average. So right now here at this stage, pull back close to the 12-month moving average. And if your target was really lower, for some reason you took there was a bigger pattern, a bigger target, and you got greedy, then you have to live through these months of pulling back, and that could be scary. Wear down on your emotions, and then you say, it's going back up, it's the bottom, and then you sell at the wrong time. But in this case, it was all good because you never closed above the 12-month moving average. It was a natural pullback, continued down, and then you have the this almost tweezer bottom here, signaling the bottom, 12-month moving average slowing down. And then when you start having price action above the 12-month moving average, that means you should not be shorting anymore. Doesn't mean you should be buying, but you should not be shorting. Let the 1, 2, 3, 4, 5. Let the months pass by. Let the market digest. Give you the next signal, and then you had attempted breakout here. Didn't quite make it. Defining some new resistance, and after that, you had this breakout here that really went through. Did that implied measure move? Where's my arrow? Okay, here's the greedy target right here. Even the greedy target got reached. So even if I would have taken the greediest target here, breakout right here, target reached. Even that wick, pressure from the sellers, bring it back down, defining some new support. So here is my next monthly defined support right here. But what you're going to notice right now is here's my monthly defined resistance. Sorry, lots of I'm dyslexic, inversing all the time, support, resistance. You could say, Pat, what? You're putting at resistance, you're saying support? What? Right. But last month actually closed below that breakdown line right here. Doesn't mean you want to short right now because the 12-month moving average start going upwards. But if you have a close below the 12-month moving average, you do not want to be in the stock. That means you sideways move. It's going to reset. You need to reassess. Your after that is just the pressure. As long as it stays under 12-month average, it's going to start making it go flat and down, and then pullbacks are more likely to be just simple pullbacks and then continuation breakdowns than actual reversals and you going up. Because always remember, the 12-month moving average is going upwards. You have increased chances of going upwards, but before it goes down, you have to go flat and then down. Same thing here. If the 12-month moving average is going downwards, and if you want to play it going up, well, at least wait for it to be flat, because before it goes up, it has to go flat, right? And look at these nice drawings. Okay, we're below 12-month moving average. It's not angling down yet. On the weekly, we're probably going to get some details to see if on the weekly, if it's starting to be stage 4 territory. I think it's probably going to be, or at least stage 3, early stage 4. But that was a pretty much, how long did that last, that bull run? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Man, almost 1 year. So you could have been in this almost 1 year's time, and ride that nice upwards move. One, higher lows, higher lows, higher lows, and then higher lows, but you're below 12-month moving average, you're out. Okay, weekly, Stan Weinstein. Let's remove all those drawing tools. What do we have here, guys? Look at that. Oh, look at that red volume right here. Increasing red volume right here. What else do I see? Underperforming the SPX. Underperforming the SPX. Price action below 30-week moving average. Not declining yet. So as soon as the 30-week moving average is going to start declining, and that's one of Stan's premises, you want to make sure you're declining 30-week moving average if you want to short it, and inclining if you want to go into stage 2 and then buy. So we're very, very close to a stage 4. Remember that weight of evidence, all of those clues adding up. We close below this weekly defined breakdown line, but we still have that Ichimoku cloud defined support right there. We have some more support here coming up. So we need a little bit more price action. I don't know what's going to happen here. Is it going to go down here and then drop later? And the more you have that price action below 30-week average, it's going to start declining. And after that, we're going to have a red area here. And that's just going to help you visualize the stage 4 decline in progress, guys. But these are big warning signs. This increased red volume right here. But we're not just quite there yet, guys. Just want to go back on the monthly. Where's my breakdown line on the monthly? Okay, broke down from this big pattern, but my next line of support is right here. 61.50. So monthly close below 61.50 is going to give me an implied measure move of, get greedy, implied measure move all the way to 49, and it's going to start coinciding with what I call a wall, previous resistance turn support. You could even move your target just a little bit above that, just to make sure that you don't run into too much support and you get triggered out for your profit stop. But we're not quite there yet. We're maybe a month ahead of the time, a few weeks, maybe a little bit more. Here's my monthly defined breakdown line right here. So we're not out of the cloud, a lot of support left. We're just going to need to wait and see how this goes down. It could even sink through that monthly defined support, come back up, close above, and maybe give another try later. But definitely, you don't want to see this. You don't want to see those red volume candles. If you do the Stan Weinstein style, remember, you get in, I don't see the volume. Uptrend, higher lows, higher lows, higher lows, higher lows. Oh, warning sign. Higher low, but closing below the 30-week moving average. Not a place you want to be. Indications that something's up. Still went for another go to try to beat those previous highs. Sellers coming in, refuting it, and then going down. And then right there, if you didn't respect that 30-week moving average, then it made you suffer a couple of weeks. You should have exited it right there. And then if you really take an objective view, take a step back, then you're seeing that you're starting to create lower lows. Lower lows from this one. Hey, I should be out. And if you're still sticking around, hey, you're even lower than the previous lower lows. And that's not where you want to be. That's downtrend. Or the beginning of the downtrend. A few more weeks to go. And after that, I think the weight of evidence is going to give us a clearer view if that stage 4 is going to break down, or if this was just a shakeout and we actually get some bullish price action and then go back above the 3-week average. But until we get a close above 74, 74.50, 75, this is no man's land. Stage 3. Remember, if you insist on playing stage 3s, you'll get whipsawed and shaken out, and you'll take too many hits. You gotta make sure you want to enter at the bottom here, beginning of stage 2, or you want to short at the beginning of stage 4 when it's confirmed. You don't want to be in here at stage 3 where it's just the market's volatile and trying to figure out what the next move is, guys. All right, for oil, man, close, but not close enough. Thanks for listening, guys. Yeah, and subscribe. Thanks again.